Okay, guys, we step into Chapter 3 now. Chapter 3 is looking at two primary things. It's looking at adjustments and then the preparation of the financials. Talking about adjustments. Adjustments is the idea that before we prepare our financial statements, there are certain adjustments that we have to make. I don't know if you've ever been involved in any kind of a building project or buying a house or having a house built or moving into an apartment, and somebody says to you, well, we need to fix up the place before you move in. Or like if you're having a house built, there might be a punch-out list before you get a certificate of occupancy. And it's kind of like these are the last things we need to do. Make sure everything's up to code. Make sure everything is just right before you actually move in. It's similar with our financial statements. There are certain adjustments that we have to make to certain kinds of accounts in order to make sure that our statements are prepared in accordance with what? Generally accepted accounting principles. Before we talked about the generally accepted baseball principles. Well, the rules of accounting. Remember what accounting is now. It's an information system, right? For identifying, recording, and reporting the relevant business activities of an organization or enterprise. Well, generally accepted accounting principles dictates to us how we are to record and report things. But before we jump into that, I just want to show where adjustments show up in the accounting flow or the accounting process or the accounting cycle, which I've been describing to you as really has four elements. We have an original source document, original documents, right? That those original documents then get, use a different color pen, recorded into a journal, right? And from the journal we post into a ledger, general ledger, and from the ledger we summarize. I'm glad I can say this while you're reading the writing. That says summarize into the what? Trial balance. And then from the trial balance we report. Reporting into what? Our financial statements. Financial statements, our P&L. There's an order to our financial statements. Our profit and loss statement. Our statement of owner's equity. That's how owner's equity has changed as a result of the P&L. And from there we have our balance sheet. Everything here will follow the accounting equation. Assets equals liabilities plus owner's equity. We will never violate that accounting equation. That's our anchor. So you see there's four steps here really. There's 1, 2, there's recording, posting, summarizing, reporting. Step 1, step 2, step 3, step 4. And in a way you might want to remember this, if you need a mnemonic or something like that. Recording is an R, right? Reporting is an R. In the middle, we have a PS. Just think of writing a letter to somebody, and you say PS, posting, summarizing. So it's kind of an R. The bookends are an R, and in between you have a PS. So R, P, S, R. R on one end, R on the other end, and in the middle, what do you have? A PS. Here we're recording, posting, summarizing, reporting. Okay, so where does Chapter 3, this whole idea of adjustments, where does this idea of adjustments fit in? It fits in right here. The trial balance has to be adjusted before we report the financial statements. So that's where Chapter 3 is focusing. It's looking at the accounting cycle right here and saying, okay, I'll just write Chapter 3. Adjustments appear or become relevant right here. As we're getting ready to report our financial statements, there are certain kinds of adjustments we have to make. And I'm going to look at those adjustments, obviously, in another video. But where they appear in the accounting cycle or the flow or the process is right after the trial balance, before we report the financial statements. And if we were to ask the question, why do we have to make these adjustments? I think I'll start another video on that and we'll ask the question, why are we making these adjustments in the first place? That's a good question, a way to begin our next video. See you in the next video.